identifying structure and how to use it. First things first, I will apologize for my lack of actual trade breakdowns. I have been away in Leicester doing some training. So therefore, I haven't really had a chance because the training has been throughout the day, just to better myself and things like this. So it's important to invest in yourself. So just go to these training courses. So I haven't had a chance to actually catch a trade. I've still been doing my daily analysis, but me personally, I have not been taking any sort of trades. So that is why there is a lack of breakdown. So I don't have one for you today. As you read by the title, we're jumping into part 2 of finding daily structure and how we can use daily structure to get ourselves a trade. So without further ado, let's get into it. How to find structure and how to use it as a benefit. That's what we're going to be going through today. I did want to go through some back testing, so I have drawn it a straight line, so we both don't know where we're going to end up. Just so you know, I'm not sort of cheating the system in any sort of way. So I will just scroll out a little bit, hopefully not go too far so the system breaks itself. But if we just skip to the start of the line, let's say, and we jump to the 30-minute to get some sort of bias. So when it comes to bias, we all know higher highs, higher lows, different sort of structure points. For example, we're in a short-term downtrend. Because if you get the trend line tool, we can clearly see that trend is going to the downside. But what if we wanted to catch buys? What levels would we mark out? Well, because we do this in US session, and I will just say, I say every video, I do know, and I understand it might get annoying. However, I do have to clarify it for anyone new watching. The red candles on your screen indicate London session and Asia session. The beige candles indicate US session. Now, when I am trading US session, I only want to look for previous US session highs and lows. So therefore, using this indicator, they stick out like sore thumbs, as you can see already. The only zones I'll be getting from London or Asia session is support and resistance levels that they've created, aka points they've just tapped in multiple times. So therefore, I don't really need to see them. I only need to see what US session has done in the past and what I can use as targets and how we use them as entries as well. So without further ado, what would we look for? If we're looking at the chart and we want to say, look, I want to get into a trade today, we would get something like this. So what do we say? We can mark out this level here and say, well, if we do break above this level of structure right here, get a tap back in, then we can take it higher. The conflict of interest for me here is that this zone here is way too close to this US session high. So if you did get some sort of entry, let's say here, your targets would have to be here and your stops would have to be here. You're not even going to make 1% if the trade does go in your favor. So that trade wouldn't be worth it for me. So in a situation like this, I would simply remove this zone here and have the rule that if we did come up here, then ideally I'd like to see some buys. We can also mark out this zone here, as this is quite a good level of structure formed by a previous US session low. Now we can say, and we're already reacting from this here, we can say, look, if US session price opens below here, gives us a tap back in and a 5-minute bearish engulfing candle, ideally we can take it further down and find some US lows that have happened in the past that we can target. Ideally, another situation would be if we broke above here, we could get a retest back in to take price up. Now, whenever I mark something like this, and you can always see this in my daily analysis, which is in the free Discord, if we have something like this, I will say just lower your risk. Ideally, what I like to trade is break and retest of the highs and lows of previous US session zones. Ideally, I don't want to be caught up in the middle of yesterday's US session. For example, let's say you got in on a trade like here, then we'd simply lower the risk and get in anyway. Ideally for me, because I only want to be taking A+ setups, I'm not going to get into that trade unless we do break above or unless we do break below as we have now, get a tap back in and we can take price further to the downside. So without further ado, let's just play price on here. Again, we're only going for some sort of daily bias here. We're not really entering any trades. But again, if you did get a trade here, you'd have to be very, very wary that, look, it's just not going to be worth it. Your take profit is not going to be worth it because we have this US session low here. So again, it's just something to be aware of, that you'd ideally wait for a break below here before we see price drop off. So in this situation, on this day, because all the US session zones are really quite close together, the break of structure I want to see is the it's the US session zone from the 28th of May. If we do break below that and get a valid retest, then I would be in for sells. Same again, if we break above with clearly broken structure to the high side, we're going to wait for a retest. If we don't get a retest, fair enough, it's not our day to trade. But if we do and we get a valid reaction from this zone, then we will be taking it higher. So if we play price on for the sake of playing price on, we'll just see what it does. And we see price doubles around, and then price closes. So this would not be a trading day for you. You would not have caught a trade off this zone. You might have, let's just skip back to here, you might have got faked out, and this is why we don't really like to trade in between the previous US session zone. Again, it's something you're just going to learn over time if you do implement some sort of strategy. But yeah, we do have our entry criteria for here, but like I say, there's a reason we don't trade in between US sessions. It's because I've been caught out in the past by this before, and you learn from your mistakes. So you think it's going to go up because you had a valid reaction, you had a break, retest, 5-minute candle close, which I'd gone over in the previous video. But yeah, it just didn't work, because this is why you have to have these sort of rules in place, and this is why you have to have the experience under your belt to realize, look, well, I've taken the trade like this in the past, it didn't really work. Ideally, I want to take an A+ setup. In this scenario would be a break of one of these solid structures. Did we get one? Unfortunately not. It respected both the zones quite heavily. But all it would do then is either you'd move to a different pair, or you just close your charts up and move on to tomorrow, and that's all you can do. So again, if let's just say we're going to delete 30 drawings, wow. We're going to delete all these drawings, and we're just going to do it again. We're just going to close it up on the 30-minute, and we're going to try find you a bias. Hopefully we can find ourselves a trade here. Again, not trying to skip too far back that it actually cancels itself out. Okay, so we've opened in a US session here, so I'm just going to play a little bit forward until we get something like this. So again, you're looking at this, what sort of structure points do we have? Now, we have a couple, but these aren't the best examples. So let's say we get a break below here. We can clearly argue that this is a break of structure, and we would simply target the bottom zone here. Let me just draw it out for you if it doesn't make sense. Again, our zones are from the bottom of the bodies to the bottom of the wicks, or the tops of the bodies to the tops of the wicks, if we're marking out a high. So that would be a trade. It could be worth it if we go on the 5-minute and get a reaction from here. Ideally, because price is going upwards, we can sort of catch buys from this level here. So if we get a 5-minute reaction in US session, tap back in to take price up, then that would be great as well. Now, if price does, for some reason, want to carry itself all the way up, then we do have another opportunity to get in. And this is this US session low here from the 22nd of April. We can simply wait for a break above, tap back in, and a push back up, and then we can find further targets up here. But it really is just waiting for US session to open. Now, I wouldn't get into a trade like this. So let's say this is what we're looking for. I'd get into a trade like that because we've broken the structure. I would not get into a trade like this and trade in between the US session zones that we had previously. Sometimes you're going to catch a winning trade from this, but from my experience, a lot more times you're going to be caught out by them. You're going to being a losing trade rather than a winning one. So it's always important just to wait for these proper breaks of structure, and then you can take price and try ride it up. It gives you that higher chance. You're still not going to win them all. You're never going to win them all. But it just gives you that higher chance of actually making a successful trade out of the day, because we have had that break of structure. So it's all about a breaks of structure, really. You're never going to take this down below. It might work, but in the long run, it's not going to work. And this is what you have to think about. You can't think about The week, you have to think about 5-10 years in the future. Is this sustainable? Is this going to work? Or how do I adapt it if something changes? But in this scenario, the adaptation is we do not trade in between the session zone when it's like this, when it's not a clear break of structure. So let's see what price does. Again, we might not get an entry, but we might. Let's just have a little goosey here. Let's have a look. So when is US session going to open? Play price on a little bit further. Now again, we've opened down below here, so we can argue that if we do get a break below here, I do want to take price lower. I'm not going to be taking buys from this zone because we've broken structure to the downside as we've just talked about here. So I don't want to be in buys at all. Maybe if we do start breaking, see we form this structure here, and this is the difference. This is when you'd say, okay, maybe we can actually start, because now we've broken structure. If we do break this level, that is the only time you would trade in between the zones. I know that contradicts my statement, but if you can see this structure form here, you can clearly see, well, if we do start breaking again to the upside, we have broken that structure to the upside. So then we can take it to the top of the zone, and that is the only caveat. So when price was all the way back here, you're saying to yourself, well, look, there's no way I'm going to be in for buys from this zone. If it holds, I'm still not going to be in for buys. If we break below but then break above again, get a tap back in, then we can start taking some buys up because we're breaking that structure to the upside. But on this moment here, on this little pattern right here, we can see there's nothing telling us that we're going to go to the upside. So therefore, I do not want to be in buys from this zone here, because that is sort of a Hail Mary in terms of getting a winning trade. So we only want to wait for a break of structure to happen. Like I say, we might get one. I don't actually know if we got one, but we might get one. If we do break above here, you can see how the structure would then flip, and then you can get a retest back in to take price up. So I'm trying to not make it confusing. And I know I'm contradicting what I'm saying, but you can sort of see the difference in how price was here to how price would be now if we did break above. I mean, it's 3 o'clock at this time, so you probably might not get an entry anyway. So again, you can see price came up. What does it do after that? It does come back down again, but obviously this is 10 o'clock. If you're trading at 10 o'clock, then fair enough, but that is not part of my strategy. I would be out if I was in any sort of trade at 5 o'clock. So yeah, we got a reaction from this zone, but we're never going to be looking for buys from this zone, especially if price has fallen this far down. So we'd only wait for a break and retest from this level. So we didn't manage to catch any trades, and you're going to get a lot of days like this where you can't catch trades. But this is why you have multiple pairs. Like I say, I have 4 pairs where I look for opportunities. So a lot of the time you're not going to get an entries, but you can see how price does react from these zones that we mark out. So they do hold relevance. It's all about waiting for that structure. Now, the perks of waiting for a trade is that you miss out on all the rubbish trades that you could have been in. For example, let's say you did one of rush sells from here and then price reverse from this level, you would have been caught out. So it's all about just waiting for a good setup, and patience pays in trading, and in life in general as well. So yeah, hopefully this sort of helped in sort of a structure base. This is what I use as my strategy. You'll see it in the Discord on my daily analysis. You'll see which points of structure we're waiting to break and get a retest in. And it's all pretty much the same thing of what I've taught today. So eventually you're going to start seeing it so clearly, but hopefully that made a little bit of sense to you.